Shares of Airbnb are down about 5% after a mixed fourth quarter report. The company also signaling a potential moderation in demand. Joining us now, we've got Jed Kelly, Oppenheimer Managing Director of Equity Research for the consumer market, or consumer internet here. Jed, great to have you here with us right now. I want to get your read in on this report and the tenor that you took away from the call last night.
Yeah, I mean, the report was mixed. Obviously, the market doesn't like that we had another quarter of decelerating room nights, and they're guiding for they're guiding for 1Q to decelerate, right? So the issue you have is the stock still trades at a premium multiple, a low 20s EV to EBITDA, and you have room nights, you have 1Q room nights in the high single digits, probably around where the street's shaking out is around 9% growth for the first quarter. Now, room nights should reaccelerate slightly because the comps do ease. However, it's still not what you're looking for for people to get excited given where the stock is trading right now.
And we know that they did highlight things like their Q4 supply growth growing 18% year over year. How much of that can they really hang their hat on? I know they also talked about expanding internationally beyond sort of their core market here.
Yeah, no, the supply growth is great. I mean, they're growing over 18%. I think a lot of fear was in 22 that everyone thought they were able to accelerate supply from the COVID uplift. So supply is great. The question I think a lot of investors are having is typically demand and supply usually converge, and supply is a good read through for future demand, but it's not happening right now. So it kind of makes you question, what's the incremental sell-through rate of the inventory? Are they adding more quality rooms, right? And I think some of the fear among investors is as they're getting into more urban areas or travelers are returning to more urban areas, that inventory is not converting. And then to your other point on international expansion, they are expanding into more areas. However, that inventory doesn't look to be converting as well either. That could just be travelers in those areas still aren't comfortable on the Airbnb platform, and there needs to be some consumer education.
And so in bookings, with more urban area kind of listings and hosts, how does that trickle through to the average daily rate, which we've seen kind of stall out here?
Yeah, the mix shift to urban typically carries a lower ADR than your, 3-bedroom vacation home in the Outer Banks. So the mix shift to more international markets and more urban generally would cause ADRs to go down. However, on a like-for-like basis, ADRs are still hanging in there. I mean, Airbnb is introducing more tools for hosts to drive value, increase conversion. However, ADRs are remaining pretty sticky right now.
And Jed, I want to also put this in context of the one-time tax charge that was also included in these numbers. When you look at that in terms of the overall fundamentals, then when you're looking at the numbers, then how should we really gauge the health of this business?
Well, the business is very healthy. I mean, this was a one-time tax charge that, they're going to have to pay. But when you look at their overall free cash flow, they're still going to generate well over $4 billion of free cash flow this year. I mean, from a free cash flow position, right, the business is really healthy. It actually, on valuation perspective or valuation basis, it trades at a favorable free cash flow yield relative to EV to EBITDA because they have positive working capital dynamics. So this was a one-time tax charge, doesn't indicate the health of the business. The business is healthy. I think the question for investors right now is we have decelerating room nights, but a premium valuation. So, what's the right entry point to get in given some of the top line KPIs?
Jed, just lastly, while we have you, we've been able to speak with a few C-suite members within the accommodation space over the course of this earnings season, and they're really looking at this rebound in corporate travel as that's going to flow through to margins. If you're thinking about Airbnb, what share of that do you think that they're going to be able to kind of capture as we're looking at that rebound?
They have a pretty low share of corporate travel. It's just easy for you to book a hotel when you're traveling to a city. I think what they have to do is start working with more companies, develop more partnerships to educate companies that, hey, an Airbnb can be a good option for your company to travel, right? I think right now where they benefit from corporate travel is more corporate retreats, right? You want to do you want to host, 25 of your top salespeople. Let's go get an Airbnb and you can work through that. But in terms of, your nuts and bolts business trip, they're very low percentage of that type of travel that's coming back.
That does make sense, given the sort of ecosystem, as you're mentioning, that they cater to. Appreciate you joining us, Jed Kelly, Oppenheimer Managing Director of Equity Research for the Consumer Internet. Thanks so much.
Thanks for having me.